All right, good afternoon. Welcome to your weekly take on the market. Today is Friday, September 13th. It is 1:15 Pacific time, so the market has just closed. I will be your host. My name is Scott St. Clair. I am the manager of the premium product group here at Investors Business Daily. The disclaimer, I'm not licensed. I can't tell you what to buy, what to sell, what to hold, how many stocks you should own, et cetera, et cetera. Nobody at IBD is licensed that I'm aware of. So we try to say in our circle of competence, education, uh, research, but well, I don't say we as a general rule, but most of us, and especially me, are all in on the process. So I've said it numerous times. You don't have to hear it again, but I use these tools to make investment decisions for myself and my family and friends' money. So I'm eating my own cooking, that's for sure. All right, overall market thoughts. I have one single screenshot because I used them all up last week and didn't stumble upon any this week. Industry groups, stocks to watch, and then the quote of the week. We will follow the same drill until otherwise noted. So, we don't talk about allocation and diversification and all of that too much, using our philosophy. Obviously, there's something to it. I don't want to say it that we ignore it completely, but uh, it's important to an overall investing thing. We just believe that you should have your, rather than have your eggs in a bunch of baskets, we want to have all our eggs in the one basket, so to speak, and then watch that basket closely. I think Mark Twain might have said that. So we just watch what we own very carefully, and if we get sell rules, we use them. But allocation, diversification, there's definitely something to it. Anyways, what I find interesting here is that you might think you're diversified when you truly are not, is what this chart is telling me. So maybe you own the mid cap ETF, you own the SPY, you own the QQQ, you own a value ETF, you own even the EFA World Index. Basically, you're 90% correlated. So give or take, if not stronger. So if you own the mid cap in the last 10 years, you've owned the S&P less 4 percentage points of underperformance, I guess. So the idea that you're diversified, you truly aren't. Now, where can you diversify in different products? You can own bonds, you can own REITs or real estate, you can own gold. These are all the things people talk about. Or you can own emerging markets if you want. You can own a little bit of that. So you can see that the correlation is much lighter in that regard. Now, emerging markets haven't performed all that well compared to the S&P, but everything in life is cyclical. I am certain that will change one day. I don't know if I'll be around to profit on it, to take advantage of it, but it will be there. It will happen. So keep in mind when you own, if you own Facebook, I keep calling Facebook, you own Meta, you own Nvidia, you own Tesla, you own what am I missing here? Google. You own one stock. You basically own the same thing. Some are going to be stronger than others, and so you have to keep that in mind. If you own an oil stock and you own Nvidia, and then you own some kind of storage REIT or something, I would guess the correlations are much lighter. But one time when LinkedIn was public, I can't remember the allocation I had, but I was heavy in LinkedIn and Facebook at the time. I was in both, and basically it was like, if I was 50% invested, let's say 25 and 25% in each one, I really was 50% in one name. They just traded the same. So it was either a good day or a bad day. And in the end, Facebook went up a lot more. LinkedIn did get bought out by Microsoft. It did just fine, but it was the same. It was like owning the same stock. I finally realized that I just I'm 50% invested in this area, so I might as well figure out what the right way is to do that. All right, that's all I have for screenshots. Let's jump right into the indexes. It was quite a week. All right, let's start with the NASDAQ. I can't recall if I talked about it on the video. I apologize. Sometimes the video and IBD Live kind of run together in my mind, but I was on IBD Live on Monday, which was today's the 13th. Help me do the math. It can't be the 6th, could it be? No, it's not. No. Monday was the 9th. Right there, the blue day. I'm going to find it somehow. Anyways, I think I talked about it on the video because I felt like this could be a bear trap. And then I mentioned that on IBD Live, and somebody asked, I remember distinctly, somebody said, well, what's a bear trap? What does that mean, Scott? So I just gave them the Investopedia definition of a bear trap. But so my instinct turned out right. I was wary of the downside there. It looked really bad. It was acting bad. I did get stopped out on some stuff and had a tough day on this day for sure. But it did. I just didn't have any desire to turn around and go short very heavily. And so it turned out to be a bear trap. Bear trap, basically, it looks like it's going to go down, and then you get a hard reversal the other way. A bull trap would be, I don't know if we have anything on here that would really qualify like a bull trap, but a bull trap might be something like that. Like if I went to that day 411, like that looks like a market that's going higher, right? It's going to come out of this little area here. It's been trending up. Like I would be long that market and probably heavily long. And what happens the very next day? It gaps down, closes near the low. Really bad day the following day. And what's happened is you've trapped the bulls, the people that thought the market was going to go higher, and it turned out to be a pretty good sell-off, at least short term. So this, it's not quite over yet, but it feels like the trap was set. Everyone got bearish, and the seasonality, the end of the month, and we've basically taken all of that back on the Nasdaq, and even more so on the S&P. Now, I believe the Nasdaq is the laggard. If is crazy as that is to most people to hear, I just think the S&P is going to go up more than the Nasdaq in this rally. So if the S&P goes up 8%, I think the NASDAQ goes up like 7.4% or something, because normally it would go up more. I just think it's going to go up less, maybe even a little bit less. And I'll show some charts where you can start to see that the NASDAQ is a little bit heavy. Today was a really good example of why, right or wrong, I believe that the NASDAQ is a bit heavy. NVIDIA down, Tesla barely up, Meta down. The semiconductors, they were up today, but really had a hard time going up. So it feels like Feng Yu, I don't know what the indexes were up today. Well, I guess I could look at a chart, right? That would help. I've got it right here in front of me. NASDAQ was up 0.65%. It felt like a stronger day than that. Anyways, 0.65%. And the FNGU, which is triple the FANG stocks, was up 1.5%. So with triple exposure, you basically doubled the NASDAQ. So it just feels a little bit heavy. Now, does that mean you want to be short it? No, I don't think so. I think the market's going to new highs on the S&P. I've said that before. I felt like it here, and now I really feel like it here because you've had the shakeout. So I think it's going to new highs. And then at that point, evaluate what does the NASDAQ do? When the S&P makes a new high, NASDAQ's going to be just probably barely peaking above that high. So you'll have a bit of a divergence at that point. And then I'll be curious and hyper sensitive to the price action. Like, look at the relative strength of the Nasdaq. This is the best one, right? If I pull up, well, it's kind of hard to see on a monthly chart. I don't really think that's doing that much justice. But anyways, peak here, RS peak there, RS lower. This is a really good. This tells a better story. Let me reverse this. So you make a low there. Where's the low on the S&P, on the Nasdaq? There. We make a low here, much higher than that low. But what does the relative strength do? The relative strength line actually makes a new low. So it's underperforming the S&P. So it's much weaker than the S&P, and it seems to be starting to play out in the short term. So it's just one day, but I find it very interesting that NVIDIA was down today, down 4 pennies. It's acting really well. Or acting better, but down 4 pennies today. Let's look at the Dow. So I don't really look at this too much, except for this video. Honestly, if it weren't for the video, I don't know if I'd even pull up the Dow unless somebody asked me about it. And then the Russell, just super choppy. Again, I don't think I would pull up the Russell if not for somebody asking me about it or this video. I just don't know what I would do with this. It's just such a tough index to evaluate. So I know a lot of people have talked about the 07 precedent on Twitter, and I remember, I think Charles Harris mentioned it on a podcast. So that's why I don't think it can play out that way, because everybody so if everybody sees it, then it can't play out that way, which was like a sharp break. Oh no, here, actually, I apologize. Let's advance this a little bit. And let me turn off my camera just in case. So if you're bearish, here's your, your kind of bearish scenario, unfortunately. And this is a problem with analogs or precedents. If you search high and low, you can find something bad. So you get this sharp break, rally into new highs, and then what turned out to be, you wouldn't know at the time, a bear market. So like right here, you get this sharp break, and maybe still, without this, they'll rally into new highs. I don't know. It seems like if everybody knows about it, it's going to be different. So I think there's like an 80% chance, for whatever that's worth, that this makes a new high, maybe probably even higher. I mean, we're not that far from that. And then how that plays out, you get the Fed next week, at the election. There's just so many variables, which leads me long-windedly, admittedly, to where I'm getting at, as somebody that I follow and read feels like this market is more like the late 60s, early 70s. So I was like, okay, well, let's pull up that time period. And unfortunately, we don't go back in our database as long as we used to. I wish we could get that data back, believe me. If it's up to me, we will get it back. But I might have to use the Dow if I want to go back as far as I want. And remember, the Dow was more relevant back then. So it's not NASDAQ relevant, but definitely more like the S&P. So more like the 60s, the late 60s. So you get the rally, and here you undercut the lows, fake out, boom, straight up. You take out the highs, fake out. You take out the lows, fake out. Take out this little mini high, fake out. You take out the low, fake out. You get a rally. You see where I'm going with it. You take out the low, although I think you could have made some money shorting that, and you want to avoid that in the long side. When I extend this back out, you can see like it was a shakeout. And this is a weekly chart, so it's not like every day, but this is what it sort of feels like the market might be heading down this path. Um, so I kind of am in this camp. This makes more sense to me because I don't think the '07 analog can hold because everybody sees that one. So what does that mean? Like on a weekly basis here? And this is just all for, you know what, and giggles. I don't think I would ever trade like this. When I've tried to trade like this, it's cost me money. So I tend to avoid doing that. But it just makes me kind of think like look at this, the weekly bar on the S&P. So we were down 4.5%, 4.25, and we were up 4. So it's just like nothing happened, except if you were in there, like, and you have a loss cutting plan like I do, you can get hurt. And so that's the problem if it keeps doing stuff like that. So I think we're going to make a new high. And how long does it last? A week or two or 5 or 8, anything like that. But if we make a new high and the NASDAQ doesn't, and then it starts to come back down through there, I think I've mentioned that before, that would have me probably growing claws. I'd be so short-term bearish. So, but day by day, uh, this is a bad day. This is luckily I was mostly out that day, but this is a bad day if you're in. And then right here, it looked like we were heading, if you go to the intraday, like it was a really, like, look at that. That was really bad intraday sell-off there. And then here, and then they just caught it. Why? I don't know. I couldn't tell you the slightest reason. And honestly, there probably isn't a reason. It's just kind of the psychology of the market, the makeup. It just turned out to be a trap to the downside. So uh, let's see. In the end, I think you want to be erring to the upside. If there's stocks to buy, buy them. If you're not making any progress, maybe you need to be a little bit more vigilant on your stop losses, which is no fun. You're gonna get stopped more often. You're gonna get shaken out more often. But this might be a period maybe where you want to survive. So if it's just doing a lot of this, that's gonna really make it tough for what we do. NASDAQ, S&P. Is there anything else that Oh, I know what I wanted to talk about. It's kind of market related. So here's the SMH. And this, if there's such a thing as like a head and shoulders top, this looks like one, although not all that great. I have to be honest with you, if I understand the textbook right, usually you wouldn't have this spike down in the middle of that for like a textbook head and shoulders top. And this looks really, this looks toppy to me a little bit. And if you go to like the comparison chart, so let's add the S&P 500, and hopefully you can see this chart. I guess I don't know. We're gonna have to test it. And this chart goes back to it auto starts a year from now. So you can see, like, look at the outperformance on the SMH. Here's in the last 12 months, the performance. If I change the start date to, like, let's just go back like to 2020, like look at how strong the performance was. If I go back to like 2015, you can look at that. It's incredible. So semis have been the unmitigated leader. And if I go to maybe 4 or 5 months ago, so let's go like 4 or 5, 2024, and it's not there anymore. So in like the last 5 months, the S&P, just by kind of going sideways to up, while the SMH has gone sideways to down, has caught up. So this is something that this is kind of like, well, why do you think what you think about the NASDAQ? Well, these are little anecdotal stories that I see. It looks like the underperformance there is starting to show. So this should be interesting. Now, it's very difficult to short this, admittedly, it is, because it's just got a lot of great companies in there, and if they get bullish, you know, you can get run over. Like, look at this day on there. It's up 5% that day, an index. It's a lot. You know, I know it's a concentrated index, but still it's an index. So, but it looks a little tired, and you can see the relative strength is all the way down here, practically plumbing new lows a few days ago. So that's what I see as far as that. Let's go to industry groups. And last time I looked, I wasn't all that impressed with what the groups were telling me, but let's see here. So steel specialty alloys is currently one. Like CRS is probably the best kind of stock in that group as far as we're concerned, holding up fine. Food, dairy, two stocks, forget about it, just move on. Beverages, non-alcoholic, right? Defensive group. Telecom infrastructure. So that's kind of moving up. 3 months ago, it was 23. Last week, it was 6. Currently, it was 4. So that might be something I would dig into this weekend. Telecom infrastructure. Long-term care has been okay. Insurance has been really good. Hospitals, I haven't really much interest there, but it's been a good group. Gold and silver is hanging in there still. Utility, electric power. Is that defensive or is that an AI play? That's the hard part about that as we sit here. I don't know how to evaluate that. I think it's AI-ish, but I guess it sort of depends on which stock. Tobacco, telecom, banks, two localized banks. So short answer is there's not like any big theme here that tells me bull market, bear market. It's very bifurcated, which is kind of what the market is. The market is kind of, sometimes it's great and sometimes groups are moving and sometimes it's bad, which is why I prefer make sure I get this right, a bottoms up approach. What does that mean? I like to look for the companies. Show me the best stocks, earnings, sales, relative strength, sponsorship. I want to own those stocks. And then, okay, well, what's the industry group like? What's the narrative behind that industry group? Then what's the market doing? Like, right, you're moving up the food chain because whether we like it or not, the market is going to influence your stocks. The other way is the top-down approach is like, what's the market doing? Oh, it's a bull market. Therefore, what's the best industry groups? Oh, what are the best stocks in those industry groups? You work your way down. So and I don't, for me, I don't know why one is better than the other. I just prefer to move my way up. It's just like, I just think the indexes are a little tougher to decipher, to evaluate. They're just, I don't want to say they're designed to fool you. That's not a good, but they sure have done a good job in my career of fooling me in spots, which is why my spidey senses were tingling on that sell-off, that because normally I'd be getting short there. And I'm like, what happens when you normally get short here? A lot of times you get run over, Scott. So maybe this is a trap. All right. So these are the things you learn as you just observe, like Bill would say, just watch what the market is doing. Okay, let's go into some stocks. Let's start with all the big boys. So Nvidia, make sure, oh yeah, I'm in today. So there's no real pattern here, which makes it tough. Like, this is really choppy, up, down, down, up, down. I don't know. It's not a double bottom because it didn't undercut. I go to the weekly base. Is it going to be like a big consolidation? But this is why, for me, it's kind of tough to handle Nvidia right here as far as an entry, getting a new position if you don't already have one. If you have it and you want to keep it, I wouldn't fault you for that. I missed IBD Live this morning. I was working. I had a meeting, but I would have been curious to hear Kathy Donnelly's thought process. She was the guest on her Nvidia because I know I believe she's still holding her position that she's held for a long time. I'll probably watch that this weekend on video on record. So there's Nvidia, Tesla. Look, it's not doing anything wrong, but it's just not all that great, I don't think. Uh, Meta. I think last week I said if you force me to own a FANG stock, this would be the one. I still think that's the case. Doing nothing wrong. Apple, I guess Apple would be a close second. Not that dynamic, not doing anything wrong. I just don't see where's it going to go. That's my problem. But I've thought that for a while with Apple and been wrong. So uh the Ozempic type drugs look a little tired. Novo Nordisk RS82. Not doing anything wrong, just tired, right? And this is kind of how stocks top. It takes a long time for them to top if they're topping. LLY, easy choice. If I had to own one of those, it would be Lilly. Salesforce. So go to the weekly, or let's go to the monthly. What would Bill say? Usually like 7 months from the top. So 1, 2, 3, 4, 5. You're around 7 months from the top on this one. Now you could have been the same thing here. And look what they did. They made a new high and then sold off. And so you can see how kind of tough it would be if you thought that was the top. They would make you think otherwise for half a moment, and then you get the bad sell off. So this stock was, I think, a total avoid. RS52. Let's look at some potential leaders or leaders, I guess. Kava. So it was down a little bit today, I guess, deservedly so. It's made a pretty good move off the lows there, 112-ish or so, 110 to 125. Leading stock for sure in this area. GGAL. I mean, I don't know if I would call this a leader. I wouldn't call it a leader in kind of the IBD methodology, the approach, but sure is acting so well technically. And it reminds me so much of the story and reminiscences of a stock operator where he says, I did precisely the wrong thing. I kept the one that was going down and I sold the one that was going up. And that's exactly what I did somewhere in here. Well, sort of. I did get out of the one that was going down, VST, but I got out of GGAL as well because I was kind of exhausted from a mental capital standpoint and didn't want this one to get away from me. So I sold it even though I shouldn't have and knew I shouldn't have. I knew it was acting so well that so I've left 8 or 9% on the table by doing that. So it's funny how these rules, these anecdotal stories, the quotes, they work. I knew I should keep it, but I just was kind of exhausted mentally from the bad day in the other stocks. So this is acting great. App acting great. Wow, more than great. So this was a really good clue this day. I don't know if App is the leader, but I'll tell you on that day that the market was bad, I think it was this day where the market was down for a while. The stock jumped up and just was like every time it was green on my screen, day high, day high, day high. And I just couldn't bring myself to buy it. And I remember thinking, buy it, buy it, buy it, buy it. And look at that. So acting great, really strong. And look at the earnings and sales. So right up there with the Kavas as far as leadership. Shark Ninja, not something that I own but I should have and could have owned. I had the chance, but that's acting really, really well. Up what, 25, 26% from the pivot. What else is out there? So TLN in the kind of the utility power. That's what I mean. I love these shakeouts. Look at that really bad shakeout. Look at the next day. Tries to go down and closes practically unchanged. It's really good action. So like that was the day to buy it. It was kind of hard. The bars are pretty large. So maybe instead of buying 500 shares, I buy 200 shares. Just get the position. Again, this is an airball. I really like this company, like what they do. Energy to me is a slam dunk if the whole AI thing is real. And this is, I think this is the company has some kind of deal with Amazon and their data centers. I mean, how much more due diligence do you need? EME. So this pattern's a little sloppy because of a couple weird days. It's had some weird days, but really pretty good earnings and sales and construction, industrial utility complex. This could be a play on that whole building out infrastructure. If it's real, it's gone sideways for a number of months. Look at the earnings lines turning up. It's pretty good. This might be one you have to hold a little bit longer or tougher to hold for me, maybe not for everyone else, but that one looks strong as well. TLN, SMH have done those. On the metal side, let's look at gold. I know gold is just quietly pushing higher. The gold stocks are okay. Nothing wrong with AEM, AGI. Nothing wrong with that at all. I think WPM broke out today, closed basically at the pivot. Silver, I noticed, is going gangbusters. This was on my list. The pattern looked really strong, but it was a buyout, so I passed, and unfortunately, it's 16% in 2 days. I didn't dig too deep into who was buying them out. If it's a stock deal, then maybe the other stock has gone up as well. So that was a bad pass. Palladium. So I did buy palladium coming through 90, and this looks, again, I'm not very good at head and shoulders, but this looks like, I don't know if you'd call that the head and shoulders, but I had some kind of trend line like that. I had a trend line like that. Looks like a head and shoulders bottom to me. There. And if you really want to own something, you can kind of manufacture a buy point, which is kind of what I've done. So I do watch the commodity complex. And so because I've had success with it in the aughts, like the 03 to 08 period, there was some really good action in that area. So I'm not opposed to them. It's not the best names from like IBD methodology standpoint, but if I can make some money in it, I'm okay. If I can define my risk, if I can measure the risk, ideally, then I'm okay with it. So, and then copper, I don't know if this is a good proxy for it, but Southern Copper, not doing much. So not a whole lot there. So palladium and gold, at least, and silver had a good day today, I think. Yeah. Other ones sticking out to me. I think that's it as far as stock. Oh, well, I guess VST. So I do own VST. I did buy it back. I don't quite have the position I once had. I got shaken out on this day, and that it is what it is. I'm glad I sold. If I don't sell it there, I definitely will sell it there. So I'm better off just selling it on this day. But I probably should have been maybe a little quicker to buy it back. But I am in this not nearly the position size just because it looks like a good shakeout. I don't know what the pattern is, but I just, if it goes without me, I'm going to be, maybe this is kind of a FOMO buy, because if it ran to 100, I'd be pretty sick that I wasn't there. Coherent looks really good, setting up in a nice pattern weekly. A little cup with handle. So, it closed poorly and then it's grinded higher. So I do have this one, and this is a much larger position. So this is one that looks good to me. Sponsorship, just getting started, possibly, maybe. And then Duquesne Capital has a position as well. C Limited is my other really large position. I'm pretty certain I talked about this one last time. Yeah, Contra has a position. But you can see, like, relative strength wise, I didn't draw that very good. Pretty much at 52-week highs. So I like the strength off the bottom, a little sideways. ideally it takes that out and make it a little easier for me to hold if it can get going. C core Fengyu is pretty much it. And let's look at the Fang index, which is very similar to SMH. So this looks left head, right shoulder over here. If I get bearish, this will be my go-to. This will be the one that I short. I don't have a position in it currently. I think the market's going to make a new high, and then we'll see. I think that's it. I don't know if I talked about, I guess we could go backwards a little bit from a macro standpoint, the yen. So here's FXY, which is the yen proxy versus the US dollar, and this looks pretty bullish. I have been long this. It normally it would mean that the market's going down, but it's gone up and the market's gone up. At least the US market has. So that looks, and I don't know if that's for everybody. Probably not. Maybe for 10% of the people that listen to this would be interested in something like that. Okay, so industry group, stocks to watch. I think it's time for the quote of the week. Ed Seykota. I like Ed Seykota. Well, I like his thought process. I like his interviews. This is, I don't know where he said this exactly. I got this. Sometimes I'll write down quotes and I have like a book of all these quotes. I don't know exactly where he said this, but risk no more than you can afford to lose, and also risk enough so that a win is meaningful. As far as position sizing, I think position sizing is the number one most important thing from what we do, our process. Stock selection is important. I don't want to downplay stock selection, but I think stock selection is, although not easy, is easier than position sizing. Because of the tools that we have, the earnings, sales, relative strength, group strength. Once you kind of know what you're looking for based on historic winners, you can kind of put the pieces of the puzzle together. So, but position sizing is the hardest part, because for me, I always want to have like this really big position. Like I find myself sometimes getting over my skis a little bit, position size, and then I can't hold it that well. And then that's the problem. And then I complain, like with GGAL, how come I don't own it? Well, probably because I had too big a position, so I was afraid it was going to go against me. Why not sell part of the position? Well, I've gotten better at that through the years, a lot better at that. But I have a hard time holding what I don't think is a meaningful position sometimes, because I might get bored with it or something. So what is the right number? It's just too hard, for each person is so individual. So you have to decide what is no more than I can afford, and also what is enough that a win is meaningful. It tells a great cocktail story if you tell all your friends and neighbors, oh, I bought Tesla for my daughter and her Coverdale. Well, if you have one share and it triples, how big is the Coverdale? Well, if it caused the Coverdale to go up 40%, that's great. That's amazing. But if you had 5 shares in your own IRA because you just didn't have the heart for it, and it went up tenfold, and if you did the math, it caused your whole IRA to go up, 1% or something like that, then it's not a meaningful win. It just tells a great story at a cocktail party. So it has to be enough that it's meaningful. That depends on a couple of things, obviously, your risk tolerance, and the size of your account, and a little bit also where you are, your lot in life, so to speak. I definitely take a lot less risk now than I used to when I first started. And that makes total sense conceptually, right? You don't want to have to start over at X years old, when, at 25, 28, you can, don't want to, but you can start over. Jim Rogers always say it's better to blow up, early when you're young, because you can start over. So think about this, have a number, you tweak it. I like to use 5 and 10% just because the math is just easy. If I'm not that certain, if I'm not doing well, if I'm having a tough time making progress, I'll just use 5% positions. So if I have, it's real simple, if 100 grand in one of these accounts, I want to buy XYZ, I put 5 grand in there. If I'm doing okay, if I'm making progress, and then I'll put 10 grand, boom, just buy $10,000 worth. And then at that point, I'll allow it to grow and add to it. From 5, I'll add to it, and from 10, I'll add to it. But I've found that when I get to about 25, that it becomes a little harder mentally for me to handle the position size. So as it grows, let's say at 10, I buy more, and now it's 14. I buy more, and it's gone up, and now it's a 19% position. And I buy a little bit more, and it's gone up, and now it's a 22% position. I know I'm pushing maximum. I might want to take some off, take it down back to a 15% position or something like that. And so you can massage the position like that. But yeah, find the number for you, and it will help like in your decision making as well, because that's sometimes the worst part is to like a name and then you don't pull the trigger on it. And sometimes that's happened to me, and a lot of it I think is because I'm like uncertain of how much to buy. So I got to go back to my rule, just buy 5%. By 5%. What if it goes down 10%? As soon as you buy it, it goes down 10% the next day. That's no fun, but that's what is that? 0.5% of the whole account. If it hits my stop down 5%, it's 1/4% of the whole account. So that'll help you mentally to go ahead and pull that trigger and not to be afraid to take that risk. Okay, next week I will be back on the 20th. I don't think I'll be doing one the following Friday. So one more next week. 800-831-2525, market surge at investors.com. Have a great weekend, everyone. Thank you.